Well, good morning. I'm Jaginder Rana. Topic for our discussion today is carrier's legal liability insurance policy. Carrier's legal liability insurance policy. Whenever you are sending some cargo or goods, there are a number of ways of transportation. So, for example, waterways. When you are sending it through water routes, you will find the ways like by ship, by steamer, by boat, or any kind of hull. Hull means ocean going machinery. Then if you are sending it by airways, so the transportation of cargo would be by air cargo carrier or helicopter or by any air devices. It could be even drone. Then railways. So by goods train or any other specific train. And then the most famous one is road route. Road route includes GCCB, that is goods carrying commercial vehicles, maybe light commercial vehicle, medium commercial vehicle, heavy commercial vehicle, tanker, refrigerated vehicle, open body, closed body, or even PCCB. But PCCB is not used for carrying the cargo. So only GCCB is the vehicle used for carrying the cargo. So this policy is concerned for the road route only, where GCCBs are covered under this insurance. Now the question is, why carrier's legal liability insurance policy is required? See, the movement of goods or merchandise or cargo from one place to another place creates a risk of them being damaged during transportation. So if the goods are damaged in transit, the owner of the goods or marine insurer, in case of subrogation under marine policy, if any, may sue the transporter for the losses. So carrier's legal liability policy comes to the rescue of the transporter or logistic firms to cover such liabilities. Then the question comes, who can take this policy? In fact, carrier's legal liability policy is issued to road transport companies working as a carriers of cargo or goods, or the vehicles can be owned and hired and chartered. But the important part is, carrier's legal liability covers legal liability of the road carriers for actual physical loss of or damage to goods or merchandise or cargo, while such goods or merchandise are carried by them under the contract of carriage. The policy includes the base cover, like cover for carrier legal liability arising out of the loss or damage to goods caused by fire, explosion, or accident to the vehicle carrying the goods, or loss arising due to the negligence of the insured, or loss or damage caused by negligence or criminal act of the insured's employees or representatives or servants, and further provided that vehicle is damaged by such fire or explosion or accident and a claim is admitted under the motor comprehensive insurance policy covering the vehicle. Add-on covers are also there that differs insurer to insurer. Say on payment of additional premium, policy coverage will be extended to cover loss or damage due to written strike and terrorism, etc. So the important features or the key consideration of the policy are that the policy is for the maximum period of 12 months, that is for 1 year. Carrier is a reputed one and ideally with no claim history. The subject vehicle must be comprehensively insured, that is third party plus own damage cover must be maintained throughout the carrier's legal liability policy period. And the subject vehicle must be rode in a roadworthy condition. Fleet policy can be issued, single policy for all the vehicles owned or hired by the insured. Maintenance of proper record or logbooks for each vehicle is required. Consignment note for each vehicle must be properly recorded. Minimum premium depends upon company to company. Normally it is 500 plus GST. Now the most important aspect of the policy is cover duration, because the insurers are providing the comfort period of 3 days, 5 days, 7 days as per the choice of the insurance company. Because the commencement of cover will start from place of origin and loading of cargo or goods of merchandise on the vehicle and remain until the same is unloaded at point of discharge or expiry of 3 days from arrival of the vehicle at the final destination, whichever is earlier. That means the policy starts with loading at the point of origin and policy ends with the unloading or expiry of 3 days, whichever is earlier, at the final destination or point of discharge. So 3 days, 5 days, 7 days as per the choice of the insurance company, this cover duration can be provided. Now as far as the rating parameters are concerned, the rating is depending upon the gross vehicle weight of the vehicles used for transportation, limit of indemnity opted by the insured, and add-on covers opted by the insured. There are number of factors which are eligible for discounting, like type of body, vehicle body, maybe closed body, trailer, refrigerator, tanker, others, etc. Fleet discount is also there if the fleet is big one. As the past claim history is good, it deserves for discount. Other parameters which underwriters can consider, like age and fitness of vehicle and type of cargo. Compulsory excess is also there. 2% of the claims amount subject to minimum of INR 5,000 for each and every loss, and it can defer to the terrorism as per the guidelines. So compulsory excess will apply there. General exclusions of the policy are that the third party death or injury or property damage claims covered under Motor Vehicle Act will not be covered. Contractual liability is excluded from the policy coverage. Goods belonging to any servant, agent or subcontractor of the insured, except those being transported by the insured under a contract of carriage. Right and strike, but this is maybe an add-on with the insurer, that can be taken. Act of terrorism, again this can be an add-on on additional premium that can be taken. Inherent defect or vice means including insect, moth, vermin, mildew, mold, damp, wear and tear, deterioration, spontaneous combustion or decay of perishable goods. Then consequential losses, depreciation, delay, loss of market or consequential losses. Then change in law or refusal of grant of any necessary permit or license from the government authority, or contraband goods. Contraband means which is not legally permitted. An excess or deductible part of the claim is also excluded. So as far as the claim part is concerned, insured is supposed to take effective and immediate action against person or persons responsible for the occurrence. Also the staff for the safety of goods are required. This is the duty of the insured to notify within 5 days from the occurrence of accident and shall deliver claim in writing within 10 days. And the notice will be given to the company in writing for faithful particulars at his own expenses. So immediate notice is required. For the claim of carrier under the carrier's legal liability policy, certain specific documents are required, like motor OD or package policy, then vehicle registration certificate or endorsement if any, then agreement letter in black and white if there is any agreement, the certificate of registration under the Carriage by Road Act 2007, fitness certificate in case age of the vehicle is more than 10 years, proposal form, claim form, goods registry means GR or the ability or the challan, and then goods forward note as may required. Then certain informations are required, like number of vehicles covered, GVW of each vehicle, limit of indemnity for each vehicle, add-on cover selected, what type of vehicle body is there, number of trailers, refrigerated vehicles, age of the vehicles, type of cargo, past claim history, or it's a single policy or fleet policy. So fleet policy can be issued. Normally transporters prefer fleet policy only, where the number of vehicles are more. Motor package policy for comprehensive motor insurance is mandatory for the vehicle to get covered under carrier's legal liability policy. and the insured is required to renew the comprehensive motor insurance policy. Otherwise, no claim will be paid under carrier's legal liability policy if the motor OD package policy is not in effect at the time of claim. This is also one of the conditions. Then carrier's legal liability policy covers the liability, whereas the marine policy covers property, goods, cargo, merchandise. So carrier legal liability protects carriers against their legal liability claims arising due to damage to transported goods or cargo, whereas marine policy indemnifies the consignor or consignee for the loss or damage to goods cargo during transportation. I mean, this could be the question whether the carrier legal liability policy covers liability, whereas marine policy covers the property. So this is a differentiation. Vehicle covered can be owned or hired, chartered or even chartered, and can be insured for shorter duration. And maximum policy period allowed is only 12 months. Under insurance is not applicable, as this policy covers legal liability of the carriers for loss or damage to the cargo covered by covered events and not covers the cargo or goods. The liability will be paid by the policy in full up to the AOA and AOY, means any one accident or any 1 year limit subject to policy deductibles. So this CLL versus marine policy differentiation is must. Marine policy cannot be issued to the carriers as they don't have any insurable interest in the goods itself. They are the custodians for the timing till the goods are safely delivered. And if there is a marine policy, it will indemnify the consignor or consignee for the loss of goods arising out of the covered perils under marine insurance. But if such perils, after payment of the claim to them under marine insurance policy, will go for recovery proceedings against the carriers, in such a case, carriers are legally liable to pay compensation to the marine insurer. Whereas in case there is no marine insurance, then the carrier will be liable to pay compensation directly to the consignor or consignee for the loss of goods due to therefore default or fault. So now sum insured is important, because sum insured is the amount set out in the schedule against each vehicle covered in the policy, and the same represents the maximum liability in respect of a claim. It is up to the insured to decide the limit of indemnity required. Generally, it will be the value of the goods cargo being carried out by the carrier. Say, for example, a oil tanker has the capacity of 5,000 liters. Per liter oil rate is 1,100 rupees. So total 5,000 into 100 means 5 lakh rupees. That is any one accident limit. So for other goods carriers, sum insured can be value of the goods being transported as declared by the consignor. So again, attention to be given that it is the insured who will decide that what will be the required sum insured under carrier legal liability policy, on which they may agree. Premium rates differs company to company, because for the most hazardous risk like petrol pumps or logistic firms, 1% of sum insured, but for non-hazardous it could be 15 paisa, 20 paisa and like that. And the Public Liability Insurance Act 1991, this is not mandatory. This is as per the choice of the insured to take the carrier legal liability policy. It's not like Motor Vehicle Act 1988, where the third party liability insurance is compulsory and personal accident cover is compulsory. So this is as per the choice of the transporters or the carriers or the logistic firms. If they want, they can take the policy. So this is all about the carrier's legal liability policy. Mainly the transporters have the choice to select the fleet policy according to the number of vehicles, and this policy is issued to the transporters, logistic firms and carriers. Add-ons are as per the choice of the transporters. They want, they can select. This is a policy which is required for the peaceful operations of the transportation business. So almost all transporters are taking this policy, because this policy is not new. This is since the beginning in the market, and this is giving the complete protection to the transporter firms. Thank you very much.